We've got a lot of items to cover. Not too bad, but we do have a lot to cover in the next couple of hours that we're together. The main thing I want to cover first is, before people start leaving, is the business plan for traders. Okay, this is probably the most important piece in regards to everything that we've been doing is kind of leading up to this. And it's not like it's a big revelation. It's just most of the questions I get from you guys, I think will be answered and summed up and with this. This is a tool that you can use to manage how you're doing. Okay, and I just want to show you kind of the process that I went through for this, and obviously answer any questions that you have. Before we get started, any questions on anything we've done today? Been kind of a flurry of activity, late nights, early mornings. Everybody seems pretty chipper. That's great. So the business plan, what happens with this is that I, in my own personal experiences with trading, I at one point decided that, okay, a plan might be necessary. I had heard about it. Everybody hears about trading plans, and I put together like a one-page plan. Over the years, that has come to be about 15 pages, and the reason it's so long is twofold. First, it's very detailed, and secondly, I incorporate pretty much everything in my life into my trading plan. Okay, I mean, what do I do 18 hours a day? I'm either thinking about trading, looking at the markets, updating the website that talks about trading and things like that. So obviously, trading kind of overflows into everything that I do. So it's kind of more of a holistic approach to trading in terms of taking into account, my entire life. It may be overkill for some of you guys, but hopefully that you'll find a few things in there that you can use, and I will highlight some of the key points on that. And obviously, if you guys just have any questions, just let me know. We've had a lot of good questions this week have been kind of geared towards, well, you do it like this. Why can't I do it like this? Absolutely, you can do it like that. Whatever you want, whether it's a specific play or anything like that. Our goal with this is Hubert and I are going to show you what we do. You take from us what you think will help you, and go off to the races. Okay, so that said, let's see if this works. So the first thing I do every year, and I do this in December. In December, the markets are quieting down, and I'm not trading as much. And I take about 2 or 3 weeks to really go through and ask myself some very basic questions, and based on the answers to those questions, start formulating my trading plan for the next year. And the first thing is, why am I trading again? Okay, it's this was last year's plan, but why am I trading again in 2005? It seems like kind of a silly question, but this needs to be something that you're doing on purpose. Okay, it's not like I'm going to Vegas to have fun or I'm trading to have fun. It's really, why are you trading? Is it just to try it out or whatever? So my reasons for this, the first one of the ones that I like is it's the financial rewards. I worked in corporate America for a while. I've had some of my, in high school and college, some of my own businesses. And you see the difference between having an income that could be semi-limited to literally the sky's the limit within a reasonable amount of time, within a reasonable amount. I think there's a misconception that you can go into trading and take we always hear about the people that it's like, hey, you can take $5,000 and make $100,000 a year. That's BS. But can you take $100,000 and generate 50% a year and live off of that? Absolutely. These are things that are reasonable. Actually, probably the most important thing for me, all my life I've always kind of moved around. Growing up, lived in I think 9 different places growing up. I like to travel. I like to be able to have the freedom to go and trade from anywhere. If I'm going to Asia for 2 weeks, I want to be able to continue to trade. If I decide to go move and live in Mexico for 6 months, I want to be able to go to trade. And that's very, very important to me, the independence in terms of location, not being dependent on any one location to do what I like to do. The other thing I like about this is you have the freedom to choose who you want to work with. Okay? To me, it's very entertaining to spend my trading days with Hubert. Do
you want the bed or the house?
Sell it half. Trading to me has it attracts and has some of the most interesting personalities in the world. There's it's a very, I think, there's a lot of guts and determination, just different things like that, as opposed to just going and taking a job. Here you are, as Hubert would say, putting your cojones on the line, and trying to figure out if this is something that you can do, okay? I mean, it takes a lot of guts. I mean, it's a very painful and frustrating process for people. It generally takes a couple of years, but at the end of it, you emerge as a trader, as someone who's doing this for a living. It's the best job in the world. And I think that's really cool, and anybody who I meet that is trying to do this, to me, is a very interesting person to be around. To me, it's very important, too, in terms of freedom to dictate my own schedule. What does that mean? It's like, well, if I want to take a week off, I take a week off. I like trading so much, I think about it all the time. I don't really want to take that much time off, but I could see at some point doing something where I trade heavily 6 months out of the year and take 6 months off. And I know traders who do that. Some schedules of people I know, they trade the first 2 hours of every morning and the rest of it's done. One schedule that I like particularly well, from one guy I work with, he starts trading until, and when you guys are done, you can just leave your plates there. I mean, don't worry about it. When he is up 50% on his capital, he's done trading for the year. Sometimes that happens in the first month, if he catches a real great move. Sometimes it takes all year, and sometimes he doesn't make it. But once he hits 50%, done. Okay, go in the Bahamas. And I thought that's pretty cool. It's also very important for me. I found I've never bored trading. Okay, no two trading days are alike. It's something for me where I can continue to grow. There's challenges. It's intellectually stimulating. Not only trying to figure stuff out, but I find it kind of fun to try to continually to put on trades and not get sucked into things that are going on. I think to me, being objective while in a trade is kind of a mental challenge. And it's just different things like that I really enjoy. And bottom line, if I stopped trading, I'd be a basket case. I mean, what else am I going to do? I mean, I love trading. I would miss it if I stopped, and it's just, most traders are like that. It's like, you love it, you love what you're doing. Part of what my business plan, too, regards the business that Hubert and I do. I mean, last year, when I was doing the plan, or I think it was at the end of 2003, I mean, I was like, this is starting to interfere with trading. I mean, it started off as a simple newsletter, no advertising, get a handful of subscribers. Then started doing some, we don't even advertise, but then we'll do some work with like the Chicago Board of Trade, or someone will ask to write an article, and it started growing. And it's just like, now it's like this kind of it turned into kind of this beast. I mean, I don't want to spend 2 or 3 hours a night answering emails, but at the same time, these are subscribers, and I want to, be able to, hey, they deserve to have your time and attention. So at one point, we're actually thinking of just shutting it down, and then the other option was trying to find people to help out. So we found Priyanka and a couple other people to pretty much take over the website, leaving us free to trade. I told Priyanka when I was moving to Austin, I was like, if you and your husband don't move down with us, we're just going to shut it down. She's like, oh, okay, no pressure. Make a decision. And that's part of it, too. And that same question will come up at the end of this year. I mean, these seminars are fun because it's great. We get to spend time, with folks like this, and it's probably good to do this once or twice a year. The idea with this, filming it and stuff like that, is then maybe that's something that we can pull back on. And if people are interested in our trading strategies, then that's something that they can have. All right, so once that's done and you figure out, yes, this is something I definitely want to do, then you got to figure out what markets are you going to trade. Now, this may seem kind of rudimentary, but the reason this is critical is that, and what's going to happen, and I know some of you in here have done this because I've talked to you about it, is you start off with the S&Ps and you try that for 2 weeks, and maybe that works or doesn't work for you. So then you jump into the Dow, and maybe that works, and then it's the euro, and then it's crude oil, and it's just jumping market to market to market. So instead of working on your own skill set, it's just kind of looking for the next market that you think is going to make you money. You can make money in any market. Okay, you've got to now figure out what markets are you willing to stick it out for a year, put the discipline together to try to figure out how to trade those markets. That's a lot better than jumping from market to market because you're not going to be learning anything new. So these are the main markets that I trade. The Dow, the S&P, NASDAQ, the Russell, 30-year bonds. Now in 2003, it was the euro currency. I did a lot of trades on the EC. For 2005, I trade 8 major currencies on the Forex. The majors that cross against the US dollar, as well as euro yen, euro sterling. And then also single stock futures. Now, once you have the markets, that's great. That's half the battle. But then you got to sit there and say, why are you trading these markets? For me, the mini-sized Dow is one of my primary day trading vehicles. Okay? It's important to know because then now it's like you're going to figure out which markets you're going to day trade and which markets you're going to swing trade. Great. Now when you figure out which markets you're going to day trade, what setups are you going to do on those markets? For the Dow, Some of my favorite setups are intraday, are gap plays and squeeze plays. Okay, so if I get a squeeze play intraday, guess what? I'm going to take it on the Dow. However, if I get a tick fade, I'm primarily going to take it on the S&Ps. Different things like that. So you'll know that the idea is, as a trader, you never want to be in a position where you're sitting there looking at the market, trying to figure out what you should be doing. Okay? The idea is that you know exactly what you're going to be doing. You're looking at the markets that you've already decided to trade, and you know the setups that you're going to trade, so your job is to sit back and wait for the setup. Okay? And I know a lot of you guys don't do that right now. You're looking at the markets, trying to figure out, find a trade so you can make some money. All right? That is not a profitable path to this business. If you've got a specific setup in mind, if you're a high velocity scalper and you know that when these three things happen, you're going to jump into the trade and then jump out, that's great. That's your setup. But you want to avoid just staring at the markets, thinking that, okay, it's going to go up here, so I'm going to buy it. It's going to go down here, I'm going to sell it, kind of on a gut feeling. The only guys that I know who can consistently make money doing that are in the pit. And if you want to try to compete against them, kind of at their own game, feel free. Be my guest. But online, and the reason these guys, and we've worked with these guys before, the reason they have such a hard time coming online is that they're now trying to use the same instincts that they've developed in the pit online. Okay? And they're sitting there looking at the markets, green bar buy, red bar sell, and that doesn't work. When you're an online trader, you have to have specific setups. Remember I told you about the school teacher in Georgia trading 100 big lots at a time. She missed 25 moves while I was down there, but she caught 3 that made her money, and those were the 3 that she was waiting for. Okay? It's a difference between doing this for a living and just trying to see if you can make any money at this. Do you want to have fun or do you want to make money? Do you want to do both? That's always fun. Okay? So, all right, so these are different plays that I'll do in these. I mean, like the grains, I know I'm not going to, I'm not going to try to day trade the grains, but I will try to swing trade them. I know this is part of my plan. Most of you guys, I don't think should have this many contracts. Okay, if you're just going to do day trading, I think 2 is enough. Pick one stock index and then something else. Maybe the Russell and the Euro currency is a good combination, or maybe it's the Dow and the Russell, or the Dow and the bonds. Pick 2 to look at like that, and if it's just one, that's fine too. I think initially at the beginning, especially if you're just focused on day trading, just focus. Make it simple. The simpler, the better. Hubert spends most of his day trading the Dow. Very simple. I watch a lot of indexes during the day, but it's really is to get a market gauge. I want to see what the Russell and the NASDAQ and the Dow and the S&P are all doing, but that doesn't mean when they all break out, I buy all 4 of them. Okay? I'm waiting for a specific setup in one of those markets, and once the setup takes place, I'll take it. Just notes on markets to trade. This is something we've been kind of pounding into you guys all week. Is once you get into a trade, you don't change it. You don't get into a day trade on the Dow and then decide to hold it overnight. And usually that happens because you're underwater. Okay, it's different things like that. There's a saying with trading: you'll never take a red position home overnight. That means that most of the time, when a position's against you and you take it home overnight, it's because you're hoping that it's going to gap up the next morning and you can get out of your trade. Okay, that's not a trading plan. Now, this is the part where it gets a little bit more interesting. I think I told you guys that part of what I used to do for about 3 years, when I got to the point where I was consistently making money doing this and where I could actually leave corporate America, was I started withdrawing profits out of my account every week. Okay, and if I didn't have profits that week, I had a savings account where I'd funnel stuff back in. But what had happened is I got into the habit of protecting profits. All right, what's the best way to protect profits that you make in the market? Take them out of the market. All right. If you have a good day and you make $10,000 or $15,000, guess what? They're not going to be able to take it back from you. The guys in the pit aren't going to be able to take it back from you if you just take it out of your account and put it in a savings account. And a lot of times, I'm very pro cash. Okay, I don't mind having cash sitting in the bank earning 1%. There's another viable alternative is to, throw all your cash in a stock that loses 50%. 1% to me is fine because guess what? Most of my returns are coming from active trading. Now I'm also, part of this is, where do you put your profits? For me, it's funding hobbies that I enjoy. I have a farm in Nebraska that I bought when my grandparents retired, and I continue to add pasture land around that. To me, that's fun. This is a town that I went to kindergarten in. I get to go back My grandparents came over from England and Germany. That's something they started in the 1850s. Carter Farms continues to grow. And it's fun for me. It's a fun thing to do. And it's an incentive for me to do good with my trading because that's something that I'm also passionate about, and I can fund it that way. Okay, I'm not going to fund it by working as a mail carrier. So it's it's one of those things that's kind of a perk. The other thing that's really important is that if you're starting out with this and you're trying some setups, just start off with 1 or 2 lots. Okay, this is the best way to test a setup. If you've got a $100,000 account and you usually trade 10 lots, there's no reason to trade 10 lots on a new setup. Trade 2 lots. Try it out for a month. How did it go? If you lose money on it, it's not going to be that big of a deal. And this is a strong philosophy that I believe in. Again, I was talking about setups being employees. Once an employee has proved themselves to me, great. You reward them, you give them raises, and so on and so on. So the way I look at setups is I treat a setup like an employee. Okay, hey, here's setup. There's my specific setup. And I know I've been hammering on you guys about these specific setups, which I know are tough sometimes when it's like, you want to be able to jump into a trade and see what happens. And I do have a way to handle that. But first, let's focus on the setups. When I get a specific setup, okay, now I want it to prove itself to me, which is why I follow it the same way each and every time. I'm in, I'm out plus 10. Then I have, the different exit-based strategies, okay? None of it's based on gut feel. It's based on, with these parameters, with these variables, I want to know over time, because honestly, a lot of these variables, you can't backtest them, okay? How are you going to backtest getting out at plus 1,000 ticks or a tick fade, or a scalper sell? I mean, you can't backtest that. A lot of it is this. It's a combination of mechanical entries, half mechanical exits, and some discretionary exits. But you can do it if you do it the same way each and every time. In terms of you get out for these 4 reasons, and so on. You can now track it. So at the end of the month, you can sit there and say, "Wow, this trade is up 13%, or this trade's down 9%. Let's see. I'm going to widen the stop this month and then try it." Now, when you have something that's proven itself, it's a hard-working employee for you. Throw some more money at it. Okay. If I can tell anything to you guys about doing this long term, that is the secret. Okay, too many people get in, they just want to jump right in, they blow out their accounts, they're done. Okay, this is the difference between doing this, for a month, seeing if you can make enough money to leave your job, versus wanting to do this for 20 years. Okay, any questions on that? The other thing is that you can do, and the reason I advocate testing these setups on small accounts like this, and it's okay to even open up multiple accounts for different setups, is that once you get something that proves itself, then and only then is it okay to add more money. What a lot of traders do is they get their entire account, they start trading, it's down, they take a 20% drawdown, so then they go out and find some more cash to replenish it. Or they lose all their money, and I call it feeding the beast. Feeding the beast. I mean, Hubert and I know a guy, he's funneled $900,000 into a trading account. He won't follow setups. It's the excitement of it. It's the thrill of the chase. He can afford it, so he's just going to keep doing it.
He still does.
He's still mentally slow.
Because he's got cash, doesn't mean he has skills.
And that's the truth. And this is even, I know, and everybody in here is going to be different. Some of you guys are going to be trading a $20,000 account. I know some of you guys are trading accounts in the much larger accounts. It doesn't matter. You can still do a setup with a small account. Make sure that it proves that it works. Okay, this is a big question I get. Now, this is what I'll do for stuff in terms of leverage. Okay, I always talk about in terms of the amount of money that you're trading. What kind of leverage do you want to use? Meaning, you got $100,000. Do you trade 50 lots at a time, 20 lots at a time, 10 lots at a time? I've talked to people who've done the range, and this is a very, it's kind of a personal question and that you need to answer for yourself. For me personally, if I'm wrong 3 times in a row, I don't want that to be a real big hit on my account, okay? So I'm willing to be wrong 3 times in a row and only lose 2% of my account. Based on that, I'm only going to be doing about 6 lots for every $100,000 that I'm trading, okay? So $1 million at 60 lots, yada, 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 yada. So it's a good ratio. Now, if you're comfortable with more volatility, now like in my Forex account, my personal trading account, I'm willing to take a lot of volatility. So in that, I'm doing the lots, it's instead of 6 per $100,000, it's 10 to 15 per $100,000. Okay, now it's a much more volatile market, but I'm willing to take that volatility there. That's something that you just have to answer for yourself, and it's part of your plan. And you'll see where I put my drawdown rules and things like that here. And you're going to see that all this kind of works backwards. I mean, you establish your drawdown rules, and then from there, you establish your stop losses and your position sizing, and so on and so on and so on. Okay. Part of this too is like per $100,000, I'm willing to trade 6 lots at a time per position, but overnight I don't want to have exposure to more than 12 lots in that. Okay. So you may have 5 different contracts you're trading, and if you've got a position on each one, that's going to be 30 lots. All right. That's too much for me to be overnight. So that's just something based on swing trading. Okay. These are setups. Okay, that we've talked about. Okay, drawdown rules. This is what I do for drawdown rules for futures. If I'm down 12% for the month, I cut my position size in half. Okay? If I'm down 16% for the month, I'm done trading the rest of the month. If at some point I get down 30%, I'm done trading. I usually take the next couple of months off. I think the last time, I'm trying to remember the last time that happened, but it was like I think it was 99 or something like that. But most of the time, because I'm not trading huge lot sizes in terms of leverage, it's not, my day trading account is bread and butter. I don't want to have a lot of volatility in it. I'm trying to do it to generate cash flow. I think kind of a goal for day traders, you got to be a little careful with this. I hear a lot of people talking about, okay, I want to make $500 a day. Well, you got to remember, you're not going to make money every day. So if on the days you make $500 you stop trading, there's always going to be days where you lose $200 or $300 or $500 or $700. That doesn't average out to $500 a day. Okay. So if your goal is to make $500 a day, some days you're going to make 1,000, some days you're going to lose 500, and so on and so on and so on. It's so what you want to do with this, what I think is a good rule of thumb, is that you can establish goals based on like a percent of equity. I have found that in trading, it is very rare for an individual trader or a mechanical system to make more than $800 per contract per day. Okay, that is, that's like you've caught some big moves. If for some reason you're having a really good trading day and you've caught you're trading 10 lots and you're up $8,000, just stop. Every mechanical system I've seen, almost every individual trader from that point on starts giving back profits the rest of the day. Okay? That make sense?
Is that the point you just made? Is that written in your notes, or should we?
No, write that down. What it is I've studied in studying mechanical systems and personal traders. At some point, when you get more than $800 per contract per day, okay, you're trading 10 lots, you're up $8,000, just turn it off. Okay, there's not even mechanical systems out there that once they get up to that point, they start having to draw down the rest of the day.
It's very interesting.
I don't know why. It's an interesting stat, but this is after watching like.
It's like a sweet spot for
yeah.
You don't want to be trading 82 times a day, just because you can't. 3 to 5 to 8 trades. Like I know if I go over 8 to 12. I know I start giving stuff back because I'm over trading. So I know I try to keep the 3 to 5 or 5 to 8. Don't go past 12.
So you're actually talking total profits per day, not just from one trader or something like that.
Total profits per day.
Sometimes some of these contracts trend all the way one day, then sell off.
Yeah.
And sometimes they don't.
Right.
And many times they don't.
The market chops around more than it actually trades.
I'm just telling you, my experience in looking at 40 to 50 trading systems and watching individual traders, if they're having a good day and they get up to $800 per contract, they're done. After that, they give it back. So just a mental note, if you get up to that, cash it in. And you think about it, if you're doing one contract per $10,000 and you're trading $100,000, that's up 8% in one day. It's a big day. The other thing I think is a good rule for day trading is not to lose more than 2% in a day. So if you're trading $100,000, 2% is $2,000, you can plan on getting stopped out 3 times in a row, and you do it accordingly. So you just do the math. If you're trading 10 lots and we want to get out stopped 3 times in a row, you take your contract. What's the money? You can lose a third of that on each trade. Or if you want to just risk it all in one trade, then you have one trade with larger size or. It makes sense. For me, I'm willing to give myself 3 chances. You can reduce that to 2, and that means you have, you can trade more contracts and have a bigger stop. But it's just math. It's like Van Tharp's. He's got a couple of good books on position sizing and things like that. If you're familiar with that, it's using that same methodology. Talked about that. Okay, so for me personally, and this is looking at my Excel spreadsheets where I track my trades, I know for me personally, my best trading days are Tuesday, Wednesday, Thursday. I don't know if that's for everybody, but for me, I think it's, on Monday you're coming off the weekend. You haven't been watching. I haven't been watching the markets. It's just I don't really have a feel of the markets. By Tuesday, Wednesday, Thursday, boom. Got a real comfortable feel with what's going on. By Friday, I'm just starting to get tired. So usually after 12 noon on Friday, I'm done. The other thing I do is I was talking like one of the biggest problems for traders is euphoria. So one of the things I do with euphoria is if I do have a really good week, I'm up 10% on the week, then I'm going to take the next Monday off. 2 reasons. 1, euphoria kind of makes you do stupid things. 2, Monday isn't one of my best trading days. Hey, let's get really euphoric after a great week and go trade on Monday. Okay? For me, not a good idea. Up 20% for the month, which happens once in a while when the stars align. Forex trading has been crazy. Or you've had some really good moves in Forex. Very possible to have some huge moves there. Do you need more than 20% in a month? Not really. I found I was talking about the $800 per contract rule. After 20% in a month, generally a lot of mechanical systems start losing and giving it back after that time. It's a good time to stop, take the rest of the month off. So what I do with this, Denise does this too, and I like the way she does it. Denise has a Word document up, and as she's trading during the day, she types it in there. And I do a couple of things where I'll have an Excel spreadsheet and make notes in the Excel spreadsheet. But it's like, okay, I get into a trade. And remember, most of the time I'm just focusing on entries, and the software is doing the rest for me. So as soon as I get in the trade, I got some time to write the entry, do all that. Where do I get out? Yada, yada, yada. So, and they're, squeeze play, scalper play, tick fade and things like that. So they're very easy to track. Now, what if you have a trade where you can't contain yourself, you see some great opportunity, maybe you heard something in the pit and you just jump into the market, okay? It's not a specific setup. It's okay to do that, but you want to track it. And I track those under a column that's called impulse plays. Because really that's what they are. They're not really planned trades, they're reactionary trades. And I track it. What's interesting, as I found, is that after doing that for about a year, I really wasn't making any money on those. On some days I made my most money on impulse trades, and on a lot of days I just ended up giving stuff back. And it's kind of like if you're looking at setups like an employee, if the impulse trade is a setup and it's not working out for you, just fire it and quit doing it. That's one of the main reasons now why I just take the setups. To me the setups are consistent. Impulse plays are fun. But again, it's like a combination of how much fun you want to have or how much money do you want to make. And really the goal, if you think of your account, and I think this is helpful, one of the things that's useful about Excel is you can plot the equity curve. No equity curve is going to go straight up, but it should trend. Interestingly enough, hedge funds, when they have a trader whose equity curve is just trending, they actually put like stochastics and things on it. When it gets overbought, they pull them off the desk for a week. It's weird. It's one of those things. One of those fast. Actually, there's a couple nice little interesting stats. So that's one thing that some funds do. Okay, they put indicators on a trader's equity, and they have noticed that. Same thing if they're having a really bad drawdown, because a lot of times like the best time to get into a fund is after a bad drawdown, because now they get all their act together and stuff like that. The other thing a lot of brokerages do, especially like in Forex, is they figure out which of their traders to fade. Okay? Is this still being recorded? Well, what will happen is this. They chart all the traders. What they do is try to find commonalities in traders just before what's going to happen before they blow up. Okay? And here's what happens. Any trader, and this is regardless, the pattern is any trader that suddenly starts making more market orders. It's 2 things. It's more. Okay, they start back up. They start using market orders instead of limit orders, and they increase the frequency of their trades. They go out and start doing the opposite of everything that trader is doing, because 90% of the time that trader is going to lose their entire account within 2 months. Okay. Does everybody understand that? Yeah. To me, it's a very powerful statistic. It goes back to the broker, Marianne, Merrill Lynch. Now she trades 100 big lots. She's doing the opposite of what everybody, that 90% of the people that were losing money is doing. I thought that was a pretty fascinating stat. And so what these guys do is they get a couple of traders who, and what will happen is traders make money, they got their limit orders in place, they're planning their trades, then all of a sudden what will usually happen is they have a drawdown and then they freak out and they want to try to make the money back. They start doing more market orders and increase the frequency of their trades. When that happens, the brokers know they got a 90% chance of making whatever money is in that account. It's a $20,000 account, just do the opposite. They're hedging themselves, the account's blown out. The firm didn't risk their capital because, they did that. They have guys sitting there doing that all day long, analyzing people's trading habits. Okay? Just remember, when you're trading, you want to see what side of the ledger you're on there. That's cheating. I thought it was a good stat, though. Kind of talked about that. We've talked about office setup. We've talked about that. Okay, so for me personally, what I like to do in my own trading, I think one thing that's important to realize is that I think a lot of people, again, you hear a lot of the advertising for, hey, open up a $5,000 account, make $100,000 a year. I think my expectations for day trading are pretty realistic. If I can make 60% a year in my account, I'm pretty happy. I don't have to go to extremes and try to do stupid things to make 1,000%. It's not something that's not that difficult to do once you get into kind of a routine, and it's something that you can it's the difference between having something that you can kind of plan on versus pie in the sky numbers, wow, I can maybe make $1 million and do this. So, and what I'm doing with this is that it's my main day trading account. I'm also going to have smaller accounts where I call high risk accounts, like in Forex. I mean, we've done Forex trades in a personal account. They're up 116% in the last 6 weeks. I mean, this is using incredibly high leverage, wide stops, and just seeing what happens. Okay, it's an account that it's, hey, I'm willing to risk a 50% drawdown to see if we can do it. Is that something I'm willing to risk my living on? No. Okay, I want something where I can have a steady income and not have to worry about where the bills are going to get paid from. So in that account, when I hit that, then I have a reward system. I like to travel, and different things like that. Obviously, that's going to be different for everyone, but I think it's important to have a goal like that. What happens, I see a lot of times, is people have a great first 6 months, can give it all back the rest of the 6 months. If I can find an excuse to lighten my day by not having to trade as much because I've met my goals, hey, that's good for me. I'll sign up for that. The other thing I do is, euphoria was my biggest problem coming into this. Okay, I was telling you guys about taking $10,000 and running it up pretty good, and then just euphoria, boom, get killed. And I'm very aware of that. So anytime I have a really good day or a good week, I'll go take flying lessons on an airplane because that scares the crap out of me. Go play golf because that's the most humbling experience that I've had in a while. Take Taekwondo and go spar with these 14-year-old Korean girls who batter my face up and things like that. And it's good because it brings you down to earth, gets you mentally prepared to trade from a more humble state of mind. I'm also a pretty strong advocate of just getting away from the market for a couple hours each day, because what happens for me personally, I would say I'm a good trader the first part of the day, but I own the last part of the day. Okay, and I think a lot of that is coming back, not only being refreshed from taking a break from the markets, but also because I rely so heavily on internal data. When I come back to the last 2 hours, I've got a chart. I've got the internal charts for the day. I know where the trend is, I know where the put call is, and things like that. And I come in really comfortable with what the market's going to do the last 2 hours of the day. Quit trading after 12 noon on Fridays. Part of my trading plan is to trade lighter or not at all during the 3 days of options expiration. Okay, it's just a good time not to trade. I focus heavily on the first 2 trading days of every month and a little bit lighter the last two trading weeks of the month, and a little lighter the last 2 trading weeks of the month. And also what I'll do, and this is 2.5%. If I reach 2.5% on my account by 12 noon, is there really a lot of reason to go beyond that? So there's some days, that's a good excuse at that point to take a day off. The other thing is if I have my first 2 trades are really good, I'm up 2.5%. What I'll do from that point on, and I'm still ready to trade, I'll just keep trading until I have a losing trade. My next losing trade, done. Because I know at that point I can have 1 losing trade and still be up on the day. Other things that, and this is kind of part of the plan too, and the reason I encourage you to put something together like this in writing is that once it's in writing, you can share it with people. Okay, you can share it with your spouse, your family. If people are bothering you when you're trying to trade, it's not their fault. It's your fault. Okay, you need to tell them what's going on. Obviously 9:30 Eastern is a very important time in the markets. For me personally, between about 9 and 11:30, I'm really taking a minimum of phone calls. I mean, if people are on the phone, it's people that are in the industry. We're talking about something that's going on in the markets. I'm not talking to mom at 10 o'clock in the morning to see what's going on, in Smithsville. It's different things like that. You want to be focused on what's going on there. I just say this for people, if part of my plan is not to do overnight trades like in the futures markets. Now, Forex is a little different. It trades 24 hours, so if one of my setups happens at 10 o'clock and the alert goes off, I'm going to take it. In the futures markets, though, like S&Ps and Dow and stuff like that, I never trade those outside of about 9 a.m. to 4:15 p.m. Eastern. Okay, if at 11 o'clock at night there's something happening in there, I'm just, I'm glancing at it because I'm doing research on the markets, but I'm not going to start trading. Okay, it's got to be part of it's part of my plan, and it's just sticking to your plan. Trades like that are impulse trades. It's just for having fun. And again, do you want to do this for a living, or do you just want to get your thrills? So, okay, the other things too is the week of Thanksgiving. I mean, take off. Take off, enjoy time with your families and stuff like that. I generally like to take the last 2 weeks off of the year. I mean, you're not going to miss much. It's the holidays. It's a good time to work on your trading plan. I like to do something physical at least 4 times a week. Since I've been in Chicago the last 7 days, I've done a lot of 12-ounce curls. So, I mean, that's been, very physical. It's like at least 10 reps each arm. But when I'm, regularly trading, I think it's important, even if it's just going out and walking, just doing something that's kind of physical activity. I like to do it after the market closes because it really clears your head, gets you like that. I found, personally, if I'm not working out and, you need to decompress, the easiest way for me to do that is like with a glass of wine or a beer, and that's a little bit careful. Traders and vices don't go well together. So you got to be a little careful. If every day you got to have 12 Heinekens to go to sleep and then 12 cups of coffee to wake up the next morning, that might be consider looking into that. But otherwise everything moderation, yada yada yada. Physical health is important. Okay, so that's the trading plan. Any questions on the trading plan? Obviously, you guys can email me questions on this too. You can also, 2 things. I do have this plan written out. I can email it to you. 2, you can write out a plan and send it to me, and I will review it with you.
I traded CLAC for a lot of years. The question I'm going to get is, why do you trade CLAC? It has a good beta. It likes to move. The 3 stocks that I trade right now intraday are CLAC, CME, and Google, just because they move. Nothing magical about it. But I did trade this thing probably for about 5 years. It was like 98% of my trading, me just sitting there, ding, 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 scalping it, okay? And then I noticed some patterns where I could have, other than just scalps, I could also have some intraday position trades, but they were just longer setups. They weren't swing trades, they were just intraday setups, okay? All right, anyway, I have a bias on CLAC that I like to follow. A 2-minute chart on CLAC is what I use, just a 2-minute candlestick chart of CLAC. If it is above the 200 moving average on a 2-minute chart, I'm bullish on CLAC. If it's below the 200 moving average on CLAC on a 2-minute chart, I'm bearish on CLAC, okay? Yeah, SMA. So you can see here on a ping pong trade, all a ping pong trade is this is the 200-day moving average, and this is the 500-day moving average. All I do on this specific setup is, when it goes through on a ping pong, there's 3 steps to a ping pong. That's a 1, 2, 3. Ping pong. Ping pong's straightforward. Ping pong is straightforward where all you're doing, I'm asking you how my play works.
200 day or 200 period?
It's period.
Period. 200 period.
So what Hubert used to do is he'd have these aren't his charts. So these are the ones what he used to do is he'd have the 2-minute chart, 200 period moving average on a 2-minute chart, 200 period moving average on a 5-minute chart.
Yeah, and that's how I found the pattern. I was sitting there staring going, every time it touches the 200 on the 2-minute, it goes to the 200 on the 5-minute. And there were different levels. I didn't question that. I just noticed it. And then somebody goes in the room and goes, hey, dipshit, that's a 500-day moving average, right? I'm like, okay.
So now it's having two
So
charts.
now I
it's
just have one
chart.
chart. So, I mean, you don't have to really know how stuff works. You just have to find a pattern and exploit it, okay? So all I'm doing is, this is the 200, this is the 500. I short it from the 200 and ride it to the 500. It's just that simple. It happens a lot, not every day, but it does happen very frequently throughout the week, okay? So that's one trade setup. I'm going to give you like 3 or 4 clack setups that I still use on a daily basis, okay? So that's on page 452. Does anybody got any questions on the setup and how it works and what I'm doing?
You want to go to your chart?
I use a 25 or a 50 cent stop, and I scale out it just like I scale out of the Dow. 25, 50 cents.
It is 200 or 500.
Period, yeah. All I know is when I put...
He'll say, when he says day, he means period.
I thought, but I just wanted to make absolute sure.
What sessions do you use? Or do you use the Globex, the 24 hours?
Just regular sessions. Just regular
Obviously,
sessions.
it changes the moving average.
I just use regular sessions.
What, 932?
What do you mean?
Do you use pre-market or anything like that?
Nope.
Just normal?
Just normal. I mean, you can... It may differ a little, but I just a regular session chart. Regular session chart. If you only use Globex, it'd probably work too, though. Wait a minute. Question? How do I scale out of it? I use a 25 or a 50 cent stop when I originally enter it, and then I'll scale out every 25 or 50 cents. It depends on how well that thing was moving yesterday. I mean, if it's going all over the place, the range is going to be a little better. I'll use a 50 cents. If it was real tight yesterday, I'll keep it to a 25. If I'm wrong on clack within 50 cents, I'm just wrong. Okay, and I'll just cut its throat, let it bleed out, and go into something else. Question?
Is that a pattern that works in anything or just on clack?
This is just a play that I use on clack.
Also, we don't know if that's a pattern that...
You can look at it. It's only a trade that I do in clack. All right, so let's move on. Clack setups. So we have already went over ping pongs. Let's go through gaps. I actually gap trade clack a lot. Here's why I gap trade clack a lot. I'm not going to go over the 200 and the 500 MA crossovers. You can read it in the manual. It's real simple. I mean, it's a 12-year-old could read it and figure out how it works. So let's go through to page 527. 527. This actually does work on the Dow Minis if you use the threshold line of the central pivot that John taught you guys how to do pivots. You can actually use this process on the Dow Minis too if you like doing it. So the rules for a 1, 2, 3 buy and a 1, 2, 3 sell are the exact same. You just reverse them. First thing you want to happen is you want on a 200 period 2-minute chart, you want the candlestick to slice through that MA like a hot knife through butter. Okay, just pow, big nice red candle. Then you want it to come back up and retrace, touch or kiss the moving average that it just sliced through, and then you want it to take out that first big red candle that cut through the first time. Okay, hard to explain but easy to look at. So here's the setup. So here's clack. This is the 200 period average. Clack slices through it like a hot knife through butter. Then it retraces, comes up here, kisses, closes below the 200, and then here's where I enter. As soon as it takes out either the body or you can go the low, it's up to you. I use the body most times. Then I'll enter clack and I'll just scale out. Does anybody have any questions on it? Same thing, 25. Yeah, same thing, 25 or 50 cent stop, and I just scale out. All right? You guys understand why I'm entering at 46.39?
Yeah.
Huh?
There's a close on that red bar.
Yeah, there's a close on this one right there. Right.
I see your entry at point 3. How would you be scaling out where on this chart?
25 cents lower, and then 50 cents lower, and then 75 cents lower. So I mean, just scale from there. That's not really 25 cents or 50 cents. I just scale out of them, man. They're just.
You've been trading this one so long, you know it pretty much.
Yeah, it's like your wife. I mean, she came back from shopping. Hi, honey, how are you? I know I'm gonna have a bad day. She comes, hi, in, and you're like, what'd you buy? Clack actually has a personality, and I've traded her a lot, so me and her get along well. I know when she's pissed off too. I mean, I know when it's like, you don't really act like you're in a good mood today. I'm gonna leave you alone, okay? So it's just like a specialist. I like specializing in niche markets, okay, and getting really, really good at them and really, really focused and doing the same thing over and over and over again, okay, because everybody else is being, everything to everybody and trying to trade 18 billion markets. They suck at all of them. Or, or they'll make money here, lose money here, make money here, lose money there. Or if you just focus in on what you're doing on half a dozen things, it makes you a whole lot better trader.
But if it's on the pivot line, is the physical pivot line?
It's not a pivot line. The line, the black line just signifies my entry. The rule again is you slice through the purple line here. Second thing that has to happen is it has to retrace and come up here and touch the 200 moving average, close below it. My entry is the next time it trades lower than the first bar that sliced through the 200.
So that's what got you suffer also?
No, because here's the low.
And the other low, which is the low 1, 2, 3.
No, I don't trade gotcha sucker trades on Clack.
Oh, okay. Sorry.
All right, so here's how I found this thing. I found myself all the time. I would chase Clack a lot, and I would chase it after it broke through the 200 moving average, and like if I shorted it right here, I wouldn't scale out of it, and it'd come back up here, and every time when it got close to break even, I'd cut it loose. So after I'd done it about 10, 20, 30 times, I was like, I need a rule to keep me from doing that. So all I did is like, okay, next time you slice through that, you are required to come back to it and close below it, and then you can roll over, or I'm not touching you. Because I ended up chasing it a lot, and I was like, why did I keep doing that? So I just put another filter in there and go, okay, you can't do it unless this happens. All right? Here's a 1, 2, 3 buy signal on Clack. Slices through the 200, runs off, pulls back, touches it or barely kisses it, and then boom, trades back up, takes out the body of candle 1, I'm long. Okay? You guys got the pattern? It's pretty easy. It's pretty simple. A lot of people don't believe it works. Watch it for the next 3 weeks. This works on Clack. But it does also work on the Dow Mini if you just, instead of using the 200, use the pivot line. Okay? It does work on the Dow Mini. Slice to the pivot, come back up, roll back over. So yeah. Ping pongs, we already went over ping pongs. Here's the 200, here's the 500. Now, another thing I'll use, what's a good indication that this ping pong's going to work out? Right here on page 352. Why do you think it's going to go lower after it sliced through the 200 and head to the little blue line?
Because a new low,
Red on the bottom. Red
high, low, broke the trend.
Because the TTM trend was red when it sliced through. If TTM would have been blue when it cut through that, I wouldn't have done it. Okay? Same thing here. What makes this one look like a good ping pong trade? Blue. All right? So it kind of keeps me on the right side. So it goes, okay, here's a potential ping pong. Is a TTM in the same color? Yes. Okay, go. All right. This is called a trips play. It's a combination of RSI, stochastic, and MACD. They have to fire off in this order, in this sequence. If they don't, you don't trade. Okay? Does everybody know what divergences are? Pretty much?
I know what they are, but I have a hard time reading them.
Okay. I'll do it real
I'm back
quick.
to the pinpoint trade. So the setup is a range between the 200 and the 500 moving average. That's it.
That's
a
it.
pinpoint trade.
That's it.
Okay.
And you're using days for the moving average? Or
Periods, 200 periods. It's just whatever trade station default is, that's what I'm using. All right, here's how divergences work of any kind. If an indicator goes to a new high and price does not follow, that's a divergence. If price goes to a new high and the indicator does not, that's a divergence.
I
Okay?
understand that conceptually, but sometimes I'll be looking at a chart and you guys will say, hey, there's the divergence, and I go, let me see that. But
All right.
maybe it's just practice.
I've got a couple of charts that have great divergence
Divergences.
examples
Okay.
too, so I can
So
explain those.
this is a swing methodology of Clack. It does work. You just have to be patient. All right. Daily chart of Clack. You're looking to first. You want it to be in a nice little uptrend. First thing you want to happen is you want an RSI divergence, which takes place here. Makes a new high. RSI does not make a new high. Boom. There's your first RSI divergence right here, okay? Now, second thing you want to happen is you want the stochastic to cross into a cell, which happens right here in this area, okay? Third thing, you have to wait and be patient for a MACD sell signal of a cross lower. You get short right here on this day and just scale out. I will use the high of the entry bar or a 2-bar trailing stop, whichever one you're more comfortable with. All right, when we go through lopes and hopes, you'll see what a 2-bar trailing stop is. Does everybody understand this setup?
Will your red dots and blue dots almost do as well?
Yeah, pretty much, yeah. Same thing. I'm looking for sequence though, it's true. Yeah.
The divergence first is that RSI make a new high and the stop did not make a new high?
No, the price made a new high, but RSI did not. Okay? So just reverse that.
Yes.
All right. So then the second thing is stochastic sell signal. Third thing is MACD sell signal. Short it, trail a stop, scale out. Okay? My scaling out's going to be totally different than your guys. I mean, I could tell you scale out every 2 cents, and you guys might want to scale out every 20 points. Another example. We'll just go through another long example, or a short example. Price makes a new high. RSI does not. This was the most previous RSI high. So you have an RSI, negative divergence. Stochastic goes into a sell signal. MACD goes into a sell signal. Short clack. Write it down. Now, you can use this for an exit. What you can use for an exit, if you don't like staying in stuff a long time and you're kind of unsure where to scale out for the big target, the next time the stochastic crosses up in a buy, just jump out. Okay? So you would have got from here all the way to right in this area here. Okay?
So you
Yes.
do this on multiple time
Stochastic never
frames.
got above 80 on that, so you just...
I don't care. No, I just want it to cross and go lower. I just want an RSI. I don't want an extreme overbought or oversold stochastic. I'm not really looking for that. I'm looking for it to just cross and go lower.
Would the scalper alert give you the same signal?
Yeah. Yes, but I'm looking for sequence. I want these things to happen in sequence, and all the scalper alert and scalper buys and scalper sell alerts are doing is telling you when they're all in buys or all in sales, not the actual sequence. Like you could have an RSI and then like a MACD and then a stochastic. See what I'm saying? It's not hard. It's not hard to manually look at it real quick. Anybody got any other questions on it? I do play clack gaps. The reason I play clack gaps is because I'm a fairly proficient clack trader. The rules are, if it gaps up more than 55 cents and there's no real news in the semiconductor index or clack or Microsoft or something like that, I fade every gap. Okay? The reason I do it is because I have a gap log that breaks down the percentages on me and tells me the fills. So I have the exact same statistical information for clack that I do for the Dow. Okay? So I know within a certain penny range whether it's got a good chance or a bad chance of filling. Okay? Over time, and I can look at whatever data series I want to. Okay? So if it's less than 55 cents, I have more than... So if it's over 55 cents, I won't touch it. And then here are the percentages for the gap fills on clack. And it just takes them all in effect. It's on page 538. So now here's my entry rules on clack. So first thing is this is less than a 55 cent gap. So all I do is I sit around and I wait for the TTM to change colors from blue to red and wait for it to fill the gap. And I use a 50-cent stop on clack when I do the gap trades on it. Okay? Pretty simple. It's just a variation of all the other stuff that I use. Why do I not take this gap trade on clack on page 541? TTM does not change. If the TTM does not change within in the first 35, 45, or 60 minutes, I just leave it alone. Okay, if the TTM does not change within the first 30 minutes to the first hour, leave it alone. The percentages don't work out too well. All right. On this example, Why do I not take the gap? Why do I not go long the gap here? Same reason. It took too long for the TTM to change colors for me. So I just stayed away. Okay? That's just some example. You want me to roll through this stuff? I can roll through until...
Yeah, you can roll through it.
Hourly rolling pivots. Does everybody understand how John works the pivots? How he trades pivots? I'll get you right now. Go.
In the previous track trade, do you ever look at pre-market volume at all?
Mm-mm.
You don't?
I mean, it's just statistics. And as long as there's no news like Intel reported that they're making so much money that they will own the world, something like that, I won't play it if something like that's going on. But if it's just market-related stuff, I'll play it. Hourly rolling pivots, just all they do is every 60 minutes, which, Denise, I swear to God, I'll give them to you.
What the heck are these things?
All it does is I put them on a 2-minute chart, and then there's a 60-minute. You remember when we went through TradeStation, like how to put another data series behind a different chart when I went through TradeStation on Monday, I believe it was? So what this thing does, every 60 minutes, it throws you out a new set of pivots, okay? So at 3 o'clock, you get another set of pivots. At 4 o'clock, you get another set of pivots. At 9 o'clock, you get another set of pivots. And all it does is it just gives you the pivot, R1 and R2, all right? You work them the exact same way that John trades his daily pivots, his weekly pivots, and his monthly pivots, okay? These are the best thing in the world on a sideways day. They'll get you a lot of turns. I mean, they'll call you a lot of highs and lows on the turns. They may not get them all right, but it will give you some opportunities to trade on sideways day because it takes the previous range of the past hour and it goes, okay, now here's your new pivots, okay?
What do you use for a close on that? What's the close of the last bar?
Close of the last hour, I guess.
Yeah,
that's a program.
60-minute bar, you treat it just like a daily bar. High-low close of the 60-minute bar, boom, you got the pivots for the next 60 minutes.
Yeah. I do not actually have these. One of our programmers sells them. I think they're like $49 or $99. Yes?
Have you tested putting Fibonacci's on top of your pivots?
I use fib clusters, but the software packages that I use are $6,000 to $8,000, so I don't really talk about it.
For Fibonacci's, what I do is I don't get really deep into Fibonacci's, like, okay, what's the Fibonacci on a 2-minute chart and a 5-minute chart? But I do like to see the Fibonacci's of the previous pivot highs and lows on a 60-minute chart and a daily chart. If those Fibonacci's come in line with some pivot levels, I'm going to highlight those because they just become that much stronger.
Just use the standard trade station settings on that?
On the fibs? Yeah. I'm just, the 38.2, 50, 618, those are the main ones I'm interested in.
But you like them on daily, right?
Yeah, I'm not looking at one on a 5-minute chart. I mean, that's just I actually like the Fibonacci's. I just don't use them for the smaller term time frames. I'm big on Fibonacci's and Forex on 60-minute charts, daily charts. On daily charts, I will set up swing trades in the futures markets using Fibonacci's. Especially 50% retracements. I mean,
And 60-minute chart for what?
well, that's the one case I will use a 60-minute chart. Yes, no, I like the retracements on a 60-minute chart as well. I had to agree with Susanna. Yeah, actually, I will. I've got a chart. That I'm going to show you guys after the tape reading of like some monthly charts and Fibonacci's and stuff like that. That we'll go over.
Okay, so here's an example of the hourly pivots. Here you can see. You see this little hash mark right here? That's the central pivot. This is R1. This is R2. This is S1, and this is S2. So you come down. There's S1. Back up to R1, or back up to the pivot, go above the pivot, there's R1, R2. You guys already know how to trade pivots. It's just a smaller time frame of how to play them, all right? Another example here, you can see it caught a good low and a good high, all right? For scalpers, it's a dream on a sideways day. All right, how to buy retracement. I use a tool from another trader that actually sells the hourly rolling pivots for TradeStation. He also has another little indicator, which I do not sell, but I do use. And it's called a trend retrace. It's a real-time Fibonacci tool. So it kind of like tells me the strength or the weakness of the market, okay? My guidelines are on straight-up days, like real hot trending days, is I will buy like an 18% pullback. If it breaks the 18, I'll leave it alone. Scalping-wise, I'm talking here, okay? I'm not talking about a position trade or a day or, or a swing trade. But if the market's just going like this, and where people go, there's no pullbacks, if it dips down to 18, I'll buy it as long as it does not dip below 18. As soon as it dips below 18, then I'll wait for the next one. Okay? So here's what the tool looks like. It's called Trend Retrace. And as you can see, it's measuring from this low here to this high. And it's telling me here's a 62, here's a 50, here's a 38, here's a 24. And right now it's currently at a 6% retracement from the highs. And it does it in real time. So if you're sitting there looking at market and somebody goes, one of the things I'll look at is somebody goes, you think the market's strong? I'll look over at the percent retracement and go, yeah, that's good. You know, and then if it will sometimes get upside down on itself. Like if you got different highs and lows or real weird moves, it'll do a weird thing. I don't know what it is. I think it's just the code, but it'll flip upside down on itself and it'll say it's at a 62% retracement because it'll take the high of the low. Overall, it's a really good tool though, and I use it every day. I think it's like $49 too. It's really inexpensive. So that's my kind of like rules of retracements for intraday micro scalping. Okay.
So is it the indicator or what is this?
It is an indicator for TradeStation sold through another company.
Can you put it on the resource page?
Yes, I will put that on the resource page too. Yes.
What would be your profit target for this?
It's time and sales. You know, I use this with time and sales. Yeah, it's like 3 to 8 points, 8 to 12 points, something small, something real small. Fib clusters. I love fib clusters. I use them like John uses pivots. Okay, I have several different platforms, anywhere from $500 to $6,000 to $8,000. If you want more information on that, drop me an email and a line. I'll tell you the ones I use. They're just, you can draw them hand by hand. It's easier to just go buy software to let it do it for you. But I use them like pivots for buys and sell areas. I used to have to do it the old-fashioned way, like draw them here like this, and they would work really good. Or if you want, like I can tell you what I've got my fib clusters set to for a week. I have to spend, if I don't do it automatically, I have a program that'll do it. If I do it by hand, it takes me about 45 minutes to an hour and a half to do it. Okay? If I let the program do it for me, it takes like 15 minutes. Okay? If you want, I can like email you guys where I've got my fib cluster set to. I do them every Sunday. Okay? And they usually don't change sometimes from week to week. Sometimes they stay the same for 3 weeks at a time. And it's just anything above price action is resistance and anything below is support. Okay? And it's just another tool to let you help whether to decide what you're doing at this specific time. Is this going to hold or is it going to bounce here? Is it going to break through it? Okay?
Do you favor a specific time frame for your fib?
You know what? I've got them on all different time frames. And like, you see this 15-minute chart? I actually put it on a 5-minute chart, and I take clusters from daily, weekly, monthly, an 89 tick, a 98 tick, an 81 tick, a 63 minute, a 60 minute, a 45, a 15, and a 5. And it grabs all those. If I have the software do it, it grabs all those. Or if I do them manually, I have to physically count the number overlapping. And then like on this one here, I think it had 8 different time frames. On this one here, it had about 5 or 6 different time frames. And I'll layer them with thickness. Like this one had a lot of time frames on that specific number. So it had more weight than say this little bitty thing right here or this little thing right here. Okay? So I'll physically grade them, how many people are stacked there like that. So yeah, but I hand draw the line and say, okay, that one's important, that one's second important, that one's the third most important.
Does the software give you the number where to draw the line? I mean, how do you get that?
Nope.
How do you do it all those time? Sit down.
How do you do all those time frames?
You said when you do it manually. I mean, you actually can do it manually all those time frames?
Yeah. I mean, it takes me an hour and a half, hour and 45 minutes on Sunday.
The software, it takes the software at least 15 minutes? Or is
Yeah.
it that much?
Yeah. It'll take it from those, and the software is not as good as doing it manually, to tell you the truth, but it cuts an hour and a half to 2 hours work down to 15 minutes. And it's close. It's just not perfect. But yeah, because it's just a pain in the rear end matching up all the lines, to tell you the truth. All right, candlesticks. I love candlesticks. You can see when I trade, I have a 2-minute chart of candlesticks. Okay? If you want candlesticks, read Nissan's book, or like in the next month or so, I'll have 100 videos indexed for candlesticks. Okay? That'll say, what is a bearish engulfing? And you'll have 2 minutes on what's a bearish engulfing. What is a doji? What is a spinning top? All that stuff. If you don't want to go through that, just buy Steve Nissan's 2 books. They're really good. Here are the ones that I like to use. The time frames that I like to use for candles are a 2-minute, a 5-minute, and a 15-minute chart. On a 2-minute chart, throw out every doji. They're worthless on a 2-minute chart. It's too small of a time frame. There'll be like a billion dojis on a 2-minute chart, and it won't help you with any decision process. All right? So on a 5, they're not bad, and on a 15, they're pretty good. The patterns that I like the best on candlesticks on the different time frames are hammers, hanging men, shooting stars, bearish engulfing, bullish engulfing, dark cloud covers, morning stars, evening stars, and dojis. Okay? So here's a 2-minute chart. You see all the dojis up here? And in TradeStation, I've got a little indicator that labels them for me, so I don't have to go, is that a doji? It just prints up there. It says, that's a doji. Okay? Does TradeStation, is it got it included now?
I'm not sure if they label it, but they do.
Oh, TradeStation does it like this. TradeStation, they put a dot right here, and then you have to right-click on the dot and go, what is that?
No, you
Yeah.
first put it that you want that to show.
Right.
And you put the color, the dot, the whatever.
Right. So this actually just labels it, so you can see. So what I do on this chart is I tell my application to take off all dojis. I say, don't even print them on there. So now you look at this one, and it'll make you go blind. You look at this one, and it makes sense because now it's easier to read. So now you know bullish engulfing, up, shooting star, bearish engulfing, down, hammer, or hanging man, whichever one you want to call it, up. Take all the dojis off, and candlesticks on 2-minute work pretty good. Just get rid of all the dojis, okay? On a 5-minute chart, the dojis are actually a little bit more helpful, okay? More than a 2. Then you can also see doji, shooting star, doji, bullish engulfing, up. Shooting star, 3 dojis, a bullish engulfing, straight up. Bearish engulfing, doji, straight down. Okay? Just, you have to, if you need training on candlesticks, really, just get Nissan's books. They're really good. And then probably my favorite time frame that's the most consistent and the most accurate are 15-minute candles. For me, I'm a little bit shorter time frame, so 15 minutes for me helps me out with the trend over the next hour or so, okay? You can see here, shooting star, doji, bullish engulfing, up day. Doji, hammer, doji, sideways day. That's a sideways day, but it did call a low here and then told you it was topping out here. All right? Just basic stuff. First thing you need, the basics, 2-minute chart of the YM, and then a time and sales of the YM with everything, and then a time and sales with, 10 and above, all right? So what I'm looking at here is I'm looking at the market's trading at 106.61. Right now the market's not really doing anything. There's no 50-tick squeezes, and I'm paying attention to the tick. So what I'm going to do is I'm going to turn pit noise on. I'm going to change, let's change the YM to an ES, because you have to be proficient on both, ES and YM. Although I don't even look at the ES anymore. I only look at the YM when I'm tape reading, because I trade it more than I do the ES. Okay? So I'm going to change these charts. While I'm doing that, you can just listen to pit, and I'm going to make observations on the pit while we're doing it.
What's the fastest way to turn from YM to ES? Do you use a hotkey or do you just...
I just click the chart and tell it to change. It's kind of hard backwards, though.
And that'll change everything for you because you're...
No, because I didn't do that. All right. So what you're looking at is all the ES trades going through at 2335.50, okay? When you hear Paul or Ben,
Does it chicken and the...
okay. Obviously, there's not as many big lots going through as there are small lots, okay? Because it's rolling faster, okay? So, first thing you're looking for when you're listening to him, when he's going 5 half, quarter, 5 even 30, 5 even 30. 5 even 30 is 1235.00 by 1235.30, okay? The E-minis trade a little different than do the big pit, okay? Just keep that in mind. It's real close, though. So what you're looking for is you're always listening. You always want to make sure that matches when you're listening, okay? If you get a bitter ask out of whack, that tells you something, okay? So now what we're going to do is, right now, we're staring at the ES. So in my head, while I'm doing tape reading and timing cells, I do 2 real-time support or resistance, okay? So in my head, this is resistance, 1235.50, and support will be 1235 even, okay? The second one would be 1235 would still be resistance. Now we just went above resistance. Now we're trading at 1235 without even looking at the chart. 1235, 1275. Now resistance is 1235.75. Okay. Now in my head I know that that's real-time resistance. Okay. Even without looking at the chart, 1235. And then where's my support at? 1235 even. Okay. So you have to do this like every 2 minutes. And then after you do it for 2 minutes, you breath and do it again.
Is this just a bracket that moves around the last 2 minutes?
Well, in my head, right. Now, my second support is actually down here on this low. The first support is right here at 1235. Second support is here, and R1 and R2 are actually at the same spot right now, okay? Because there's not another higher low. So now what you're going to do, so now, listen to pit noise. See how they got loud, a little bit louder on the break? In behind him? Don't pay attention to Paul. Pay attention to the commotion behind Paul or Ben or whoever's quoting. All right? So what we're going to do, and this is how I do it in Boston or in Austin and all those, or wherever we do them at, is you're going to stare at this. No chart. You're going to stare at it for the next 2 to 5 minutes. If you have to cheat. Write it down on paper. It will take you 3 to 6 months to sit here and go that I know support is 1235.75 and support is 1250. 1235 even, okay? Is it going higher? Is it going higher? Is it going higher? What's it doing now? Did it fade the high and just roll over? Okay, and I'm not even looking. Okay? I'm just using pit noise right now. Alright? So after it popped up, is it now trading sideways, slightly lower than the high it just put in? Okay. Well, you can see the numbers though. Okay. All right. So now in your heads, give me a resistance. Where's resistance? What was the highest print on the note? 3650. So 3650. Imprint it in your head or write it down on paper. Where's the real-time support at right now? 1235 even. Okay? 1235 even.
36. That size is 36.
All right. Well, that I kept, and then after, if it makes a new one, and then I'll move it up some. I want the first one to be real tight, and then the second R1 or S2 is a little bit looser. Okay. And then if it'll break out, then I'll reset it. Okay. So like when everybody's going, oh man, you got the dead low or the dead high on that. I just seen buyers or sellers there, and I was reading tape in real time in my bubble, sitting there, just focused in on what I'm doing. Okay. So now do this. And I'll just quiz you, where you think the high resistance is and what's your low. Where would you be? You always have to be asking yourself, long, short, flat, and I'll ask you, would you be a buyer here or a seller here? But just think about a scalper. If you're not a scalper, it's not going to help you much. I mean, it's a good skill to have even for position trades because you can laser focus in on your entries.
Second, I'd be sure.
All right. So now, just for the next 3 to 5 minutes, just stare at it, and you just have to put in screen time. There's no substitute from just sitting here staring at it and trying to figure out, okay, 1235.75, was that the high, or was it 1236? 1236.50. Now where's support at? 35? 35 or 35.50? All right, let's cheat real quick. All right, support is here. Resistance is here, and here's where you're trading at now. You guys got it? All right. Now, all you do is you just sit here for the next 3 to 5 minutes and stare at it. In reality, you should do this, in increments of 20 minutes a day, and do it an hour at a time. 20 minutes, 20 minutes, 20 minutes. This is everything. The next thing we're going to do is we're going to put on the big guys. And then we'll combine the big guys and the little guys. And then we're going to turn the pit off. Okay? Then you're going to try to do it without any pit noise. Okay? And then after that, we'll just turn off all the screen and no chart, and then we'll just use PIT. So you have to be proficient in all of them. Then when you combine all of them together, then you'll be able to read tape if you practice it for the next 2 to 6 months. Okay?
Read tape before scalping.
Read tape for scalping, yes. And then after we've done this, after we went through all these little lessons real quick at 5 minutes at a time, then I'm going to stand up here and I'm just going to go, here's what I'm looking at, here's what I would be doing, right here's what this means. Okay? So just sit here and stare at this one. Marcus not really moving too much right now.
Do you watch signs on this a lot too?
On this, not on this one, I don't care. On this one, it's just flow.
This is the straight.
This is everything.
Would you do this the last hour of the trick on the day?
Huh?
Would you do this the last hour of the day? Or
I tape read all day long. If I'm getting ready to enter something, I will tape read to give me a better entry. All right? When we were watching the guy at the S&P trade today, when he was trading, 25, 50, 100 lots, 200 lots at a time, same thing. He was not looking at his charts. He was just sitting there. Same thing. All right? So in our range that we know where our support and resistance is, where are we at in our range right now?
Kind of in the middle.
Right in the middle. Right in the middle.
Lower end.
All right. Ticket change time. Pit's not really doing anything. Yeah.
How close to the close?
We got about an hour. Now we'll have better information because here comes Ben.
It's Ben?
Yeah.
Yeah, it's a difference.
So just for transaction reporting with the orders.
What's the significance of the colors?
Huh?
What's the significance of red and green?
Yeah. I had no clue. One's at the bid, one's the ask, and one's between the bid and ask.
But you get red and blue in the same.
One's at the bid, one's at the ask. When I look at it, I just say green's buyers, red sellers, but it's actually at the bid or at the ask or between the bid and ask. Don't try to overcomplicate it. Just red's going down, green's going up, and whites are in between.
The number next one is size, right?
Yep.
But you don't look at that?
I want this one to start acting like this or like this. I want it to just start like a waterfall. The damn thing lights up, you'll see, like that right there. It'll start going. It'll look like it's flashing real crazy, and it'll go fast, really, really fast. Yeah, they'll roll through them. I mean, they'll look like your wife at Zales counter. Speed, it means there's a lot of trades going through, activity, it's expanding. The volatility is expanding a little bit. So, where are we at in the range? Are we at the upper, lower, or middle? We're at the middle. Mark's not really doing anything. All right. So we've done this one for about 3 to 5 minutes. Let's take a look at the big one. Now for this one, this was anything above 25 contracts and above. Okay. 25 contracts and above. Hey Keith, would it be better over here or over there? Where at? So now we have big sellers. Are there more buyers or sellers on time and sales right now?
Bye.
Okay. Are we met at 36 with some slight resistance? Okay. Will it be able to hold?
We don't know.
We don't know. One way we can know if it's going to hold is we can look at the little guys. The little guys will peck away at things. And eventually it's like, they'll peck away at a wall until they break through the wall. Then the big guys will follow. And sometimes the big guys will go first, and then the little guys will follow. There's no rhyme or reason to it. You just have to pay a lot of attention to what's going on. Okay? And you have to focus. If you're doing something, you really do have to get in a bubble and just look at it and stare at it and get in the zone. I just call it a bubble. And you're just paying attention when you're trading. You're like, ding. And it just takes a little while to get used to it. So 25 contracts on the biggies is a good size. So right now, do we have more buyers or sellers? We still have more buyers, but we have been met at 375 or 575 with resistance with some decent sized sellers. Okay. So we'll look at this one for about 2-3 minutes. Then we'll combine the little guys and the big guys. Okay. And then after that, then what we'll do is we'll we'll just do pit noise, all right? And then we'll do no pit noise, and then we'll have a chart with it, and then I'll try to read tape for you live and show you how I look at like a handful of things to tell me when to get in, when to get out, just on tape reading, okay?
And when you scout, you take 10 points? Or
3 to 8, 12, just whatever I can get.
On the ES?
No, YN. You can't really scout the ES. You can scout the ES, but you barely use limit orders. So the whole time you're doing this, listen to the pit.
nothing.
There's nothing going on. There's a bit of ask, but there's no noise behind Ben at all right now. Well, or in front of Ben, I should say, because he's not, his back's not to him.
70-minute now, 80 student straight, 70-minute now, 80 student straight, 70-minute 6 even. 80 flyer straight, 5-minute 60 minutes straight.
So now, we've got through our 75, and we're back to 36. We still are not at the upper range of resistance yet, because it's what? 675.
5-minute now, 80 offset, 6-20.
Getting a little bit more noise, just a little bit.
580 bit here, 80 minutes 6 even. Off that 6 even off, 580 bit.
Is it a camera or what?
I hear a million. 6 even, 80 bit. 580 bit here now, off that 6 even, 580 bit.
Couldn't get through 36. Couldn't get through 36. Pit's picking up a little. Pit's picking up a little. So we've seen the big guys had resistance at 36, and then they hit it a little at 36 to make it 35, 75, and now you had a little bit of noise. So what's it trading at now? 50. Now those guys down there, they'll trade to quarter point increments. I mean, you can scout the ES on quarter point increments, but really, you had better know how to read tape, and you'd better have some execution skills. If you don't, it's like, just like they said, it's like picking up nickels in front of a steamroller. Eventually you will get ran over from time to time. Noise. What are we doing? We've got noise. Anything? It's gradually getting a little louder in the pit.
It looks like it's going to go down, but
So we're getting spurts of activity, and then nothing. Spurts, nothing. Spurts, no. What you're looking for, ones and twos are going, yeah, but still, there's still just spurts in the pit.
Oh, there you go.
Yeah. All right.
But why would the noise?
Exactly.
Why would the noise here have anything to do with the E-minis though? Because they are different places.
Because the big S&Ps and the E-minis, the arbors won't let them get too far apart.
Right. You're right. What makes it neat is the volume. It's up there and the volume.
Because they won't. Because a lot of people that are smart will use the big S&P as a lead to help you get in or get out of it. Got more pit noise.
350,
More pit noise.
yeah, a little bit out, but
Okay.
It could be a real order or an oops.
All right.
It could be a real order or an oops. You can tell if it's an oops, what'll happen is then after you see a big order, then you'll see like either it comes back immediately or 10, 10, 10, 10, 10 to get out of it.
and what it means that the green is brighter.
The offer comes up.
Okay.
Just like a tick higher. Ticker higher. All right, ticker higher. What are you laughing at? All right, so we've done this. Let's look at both. And now we're going to look at both without pit noise. It makes it harder.
Actually, no, it was, that's above the offer. That high print there was at the moment above the offer. And that's what I'm talking about. Where it's hot at 12:35:75, where it's brighter, it's because it was above the offer. That's because look at all those contracts.
All right, you guys know where it's trading at? So now here's how I look at just time and sales without pit noise, okay? I know I have more buyers than sellers on this side, and I know I have more buyers than sellers on this side. Now, watershed effect, I've met with sellers at 36 hard. 36 is the top number here. 30, boo, you get a couple chickens or a couple little guys, 36.25. Going a little higher, 36.25, 36.25, 36.25. One seller at bigger size at 36.25. We're dead even. We've got more buyers than we have sellers on this side and more buyers and sellers than this side. But we're still at a stalemate. Now we're at 36.25, a little higher. We really need to get through 36.75. Now, we're met on this side, it's at equilibrium now. It's mixed, okay? So it's probably going to stall and gain some momentum and then go higher because no big real sellers, okay? If you've seen some more big dogs on this side, it'd warn you a little bit that it's probably going to retrace more. But this, now look, now you get them. Now you get them. Now you get the little guys following too, okay? You got to go through that little flurry of activity every 2 minutes and just stay focused on it. So now, right now, is the market trading up or down?
No.
Sideways.
No, right now.
With our red bar.
Pushing your resistance.
It's trying to get through 36, 36.25 and having a rough time doing it, okay?
When do you pull the trigger?
I'll go over that next. So now, you guys really practice. I know how to do it, but now try to look at the things. Now we have more sellers on this side. We're mixed on this side. Like I'll cut off, like right there. I won't even look at that. From here down, I won't even look at it because time goes by, okay? So now what I'll look at is I'm looking at all these, more sellers than buyers, and here's mixed, 50-50 at best. So we still need to get through, in my head, 1236 and a quarter. If we can get through 1236 and a quarter, then we'll go higher. Okay? Until then, we're going to chop around. Okay? The one thing you can look for is on this stuff, so more sellers again. It's a couple little guys snuck in there at 25 and 42. Hard sellers at 36. 36. See how they're all red? All red. All red. No green. Nobody wants anything. 36.25. First willing guy to go above. 30. 25. 25. Still sellers on this side. So here now we're talking about the guys just pecking away. Just picking away. They're trying to test it out. Say, all right, let's see if we can get above 25. Let's try 25. 25. Still only 25. Still at 25. All right, now we have one other big guy jumps in at 25. So this guy is now getting a little help. Now, will it work or not? We don't know, but we'll know as soon as it happens. And let's say if we were going to go a break above 25 or 1236 and a quarter.
Both of those are ups. You see those little stars? Is that what that means again?
What's that?
That little star next to that 25 by that.
No, it just means an uptick.
Plus sign. Oh.
Plus sign. It means 36 minus 36 quarter upticked. Now we'll go. Now we should get above because now we got committed guys on this side and this side. Some guys that went long at 36 and a quarter went to 36.75, and now you're out.
No, you are.
It's a miracle.
Well.
No, actually, I do. I'll do it.
So now where's our new resistance? 675. The buy was above 1236 and a quarter. Half a point in the ES. Okay. And then you
got in at a quarter and out at 75.
The entry was above a quarter, and I'm just calling off time and sales and pit and the stuff right now. If you were going to scalp it, I would go long above a quarter, yes.
And out? No.
And out, you could go off at 75 if you want to make a little teeny. But I mean, I don't scalp the ES. This is just to teach you because this market's thicker than the YM. When we get over to the YM, I'll show you where I would actually enter or exit. Okay. This is just because this thing moves more. It's easier to train you on how to read time and sales. It's a lot thicker. The Dow moves in spurts, so it's a little harder to do. All right. So now our new support is 625. Okay, because we broke through 625 and went right to 675. Okay. So now the new support is 6 quarter. Resistance is 7 quarter. I mean 675. 675.
Very small range.
Yeah. But that's how you read in real small magnifying glasses. All right. We'll probably go higher.
You could do that with just a high-low range bracket for the past 2 minutes, but you don't get the size.
You could, but I'll see it before you will on the chart.
That's right.
All right, so now let's go just pit noise and no nothing on here.
7 halves trade.
So this is how you teach yourself how to have a market feel. You add and take away stuff, and then you learn how to use it all together. All right. We'll listen to this for the next 2 to 5 minutes, and then I'll put you a chart up that I normally look at scalping wise, and we'll throw off some we'll just I'll call out some trades. Somebody write them down, and then I'll just stand up here and just call it out. So now where's it trading at?
660 by 75.
6 halves.
6 1/4 by 65.
30 video now, 20 video on 1.5. 30's trade.
Trading at
20
30.
video now, 20 video.
So on the minis, it's a quarter.
20 bid.
Nothing.
30 bid.
So the bigs don't trade before they
No. What's the biggest trades in? 10 cents or 20 cents? 10 cents. 10 cents. We're going higher. We're going higher. We're going higher. Hear the pit noise? Without even looking at it. So now you take the in effect as you have time and sales and a chart or a tick hook or something else. It'll help you out a lot. I bet we're a lot higher. We're getting ready to break through a half. We're through a half. We're up 80. Half bid. It's not through 80 yet. It's almost. Halves are still trading. Now we're quiet again. Market will go sideways.
Did we go through resistance?
So what I always talk about like the alerts and stuff like that. The reason I like playing this all day long is exactly like this. I can be walking around, I can be in the kitchen, I can be down the hall, I can be listening to what's going on. It just gives you a really good feel of the market. And actually you can listen to stuff without watching charts and get a feel. Is it going up or down? Is it getting ready to break out or break down? And I do find it a very valuable tool in that regard.
What's gonna happen? What happened when we had noise? Should have faded it. 1,000 tick. Look right there. Look.
You should put call ratio.
I don't know. I don't look at it when I'm tape reading. I mean, I do. I've got it on my screen, but I don't have enough screen real estate here to have everything on there while I'm teaching.
What's a car?
One contract. Because futures, when you used to buy soybeans or pork bellies, it came in a car load on a train, a car load. Yeah. All right, so what we're going to look here is I just got the chart blown up, pretty good size. Let's take a look at the overall market. First, you got to have a general market direction, right? So on the Dow, it looks okay. I mean, it gapped down, ran a little lower, and then cruised higher. Okay, that's a Bible pullback. You could have done that on time and sales. Ticks have been mixed. 50 tick has caught some really good moves today. Let's take a look at the trend real quick. Put call. The put call ratio has been nice. It's pretty good. Let's take a look at the trend. I've got them all small because it's a small. Put call is, the trend is, let's see what's doing. Trend. Yeah, from here it's been going down. Trend's all right. It's not good nor bad. Trend really matters where you're looking at it from, too. All right, so now we have it here. We're going to blow it up. All right, all market orders on the Dow Mini. All right, First, what you got to establish is, where's the support at? For me, it's 680. All right? 680, 680. The first thing is, when I'm scalping, if I'm not scalping in my chair at the office, I have my thing laid back and I'm trading like this, okay? If I'm just doing position trades. If I'm scalping and tape reading, I go from here because I don't want to really over trade. If I'm scalping, I'll go from that position to this position. I'm on the edge of my seat. I'm leaning forward. My left foot is here. My right foot is here. This is the number of contracts. This is execute. All right? Okay? So if you ever hear it in the room, if I'm going, I just traded 3 different sizes. Okay? I just broke up, say, 100 lot and 20. So I'll just go. All right? It's hotkeyed. All right? Because I don't want you to know what the hell I'm doing. I mean, really, because I pay attention to everything over 10 in the Dow. And the Dow's not the thickest instrument in the world to trade. So there's a lot of amateurs that trade the Dow. Okay? I don't want them to see my hand since I'm playing against them. Okay? So I'll get in my bubble. Like I won't.
You've been in your bubble a lot, so I mean, not being funny.
Yeah, I do. I mean, when I'm trading, I get kind of focused. But I mean, if you hear it in a room, and I had to actually get a quieter keyboard because a lot of people was paying too much attention to it. But it'll be, it'll be size, submit, size, submit. All right? But really, it's important to position. I mean, if I'm scalping, I'm very aggressive. If I'm looking at patterns and just trading, I'm reading general market direction. I've still got my keyboard and mouse here, and I'll take the trade. Long down mini, long down mini. Short down mini, short down mini. Cover half, cover half. If I'm scalping, my whole demeanor totally changes. Okay? And I'll get even more focused so I can, I'll have pit noise on. I'll try not to answer too many questions in the room, So now, right now, number for me is 680, 680. All right? Not a lot of pit noise going on right now. All right? We're getting a few more buyers. Ticks are okay. If you want, like a scalp long here would not be the worst idea in the world. Okay? It's usually something I would say in the room. Because I do not call out, The tick fade's way back here. Yeah. Tick fade for me happened like 2 days ago.
That was the red bar.
Yeah, that was this bar here. Let's move that mouse. Move it. Wiggle it. Put that mouse away from the thing. Thank you. So, along here would not be the worst trade in the world. But here's the thing. As soon as it broke, this move right here, I'd be offering it out like crazy. I'm not looking to go long when it breaks here. I'm looking to already be long, and when it breaks here, give it to all the dipshits. All right? That's buying this break. All right? For real. I mean, that's how I think about it. I'm like, where are the most stupid people buying at? I want to be there to help them out. Because I'm a nice guy. I think they should be able to buy what they want to buy.
So you don't think the market's going to close higher?
Yeah, it probably will. But I'm not position trading, I'm scalping. Okay? So if we break that, I'll give them some. I may keep a few as token for entertainment. Just in case it does go a lot higher. Okay? So now watch here. Watch. Wait a minute. Wait. Not a whole lot of noise. Like if I was just going to exit on noise, I'd still be holding. But since we already broke that, I'll be out of some of it, all right? All right, I'll be out of some of it for a little quick scout and keep a few to see if it's going to go higher, and then I'll try to exit the rest of these on an explosion on the pit, all right? Just a real high noise factor, okay? But did you guys hear the pit getting louder?
Yeah.
And then the Dow took off, all right? It's not doing anything.
Oh, no, it is. It is.
Now it is. Now it is. Now it is. Now it is. So now they got all of mine. All right. Now they got all of mine. Okay. All of it. They got all of mine. I'm flat. Where did I get out at? Where did I get out at? How many? Huh? Okay. Is it coming back a little now? Okay. All it is just pit. I'm listening when they get nuts. About the time they get loud, you don't want to be anywhere near it. You want to get in before the noise and get out on the noise. Everybody else that uses pit noise gets in right there where they just made noise. Okay? Huh? I read the entry on tape. I read the entry on tape. I knew that 10,006.8 was good support, intermediate. Right? And then when we just went a little higher on pit noise, you see how the pit noise is going louder, quieter, louder, quieter, louder. Now, without even knowing, the market's actually trading higher right now, right? Okay. Do we have 1,000 tick? Okay. So now, market's in up mode. I probably wouldn't fade the tick. Market's in up mode.
It's past 3:30 Eastern.
And it's past 3:30 Eastern. Okay. All right, so now, is the market a lot higher right now than it was? Not even looking, you can hear it, okay? When the noise goes like this, quiet, loud, quiet, loud, quiet, loud, quiet, nuts, that's good. But if the pit goes like this, no noise, nuts, you fade that, okay? You guys can see that they're gradually getting louder and louder on the upmost.
When would you say that peak? Look at that peak.
No, market. No, it's past 3:30 and the market's in the up mode. I would not fade this tick. Even if it goes to 8,000. The market's in up mode. I mean, a 1,200 tick reading will probably work, but it's going to be a higher risk trade right now. Does any of it make sense? Now, you have to practice like those time and sales thing, 20 minutes a day, and rotate them, and then do it without no noise, do it with just the time and sales, combine them, and then put them all together. And you can cheat a little bit. You can use this, or you know what, if you're lazy, if you're really lazy, you can use the 50 tick too. The 50 tick will help you out. It fired off along right here and right here. Okay? That's not how I scalp. I mean, for scalping, it's all about momentum, time and sales, and reading the tape. Okay? But if you want to crutch until you get good at it, 50 ticks a pretty good signal. I mean, the 50 tick would have got you in where? On this last little move.
Buyers up here, guys, 9.5 bid. What's a 9.5 bid at 80?
10,690 and 10,006 89. So 90. So and the high was what? High was 09. So almost 18 points. Okay. Do what? No, not bad. So now here, try to figure out without my help where the top's going to be. Okay? Try to, when you think the market is topped here, intermediately, I mean just in a real small time frame, just don't say anything, just raise your hand. All right? When you think the market has topped, like what this little exercise that we're doing, just raise your hand and keep your hand raised. All right? Because you have to learn. Now look, use these tools. Use this and this and this and this and this. Also, what you got to do is you got to always be asking yourself, long, short, flat, long, short, flat. What are you, long, short, flat? Flat's a position. That's good, okay? And now you have to, now the question I ask myself on this, is this a Bible pullback? Will I have another entry on time and sales? It is. Like right now, this is going to do a just nice little retracement. It'll pull back and the market will pop higher. All right? Because the reason it'll pop higher is because the last 1,000 tick reading didn't work out too hot. And this one hit above 1,000. All right? All right? So now, listen, how you really tell if a pullback is going to make it or not is listen to the pit noise. If price is going sideways and pit's not making no noise, that's a good thing up here around these highs. It's a good thing for a continuation high. Okay? Yeah. All right. So now check this out. Let's say that prices start trading lower, and you do get some pit noise. You get some interest. The retracement's going to be deeper. Okay. But if there's no noise on the pullback, and on the very next little pit noise, it pops a little, it's going to go higher. Huh? All right. So if the price is trading here at the highs, okay? And we just went up on noise, just like just now. All right, now we're out of our trade, right? So now I'm asking myself, long, short, flat, I am flat, but on the next pullback, is it buyable? I ask myself, is this continuation likely to go higher, or is it for today? For me, I think it's going higher, but what you need to do is look, if price is trading here about the same place, and pit noise is not really making much noise, that's a good thing. If prices start to retrace some, and you get some interest and the pit noise picks up, the retrace will be deeper. Okay? Now, when they after their noise stops and then they get silent, if prices sustain, just level off, on the very next little pit noise, it'll go higher and it'll take out that most recent high. Okay? So you're just gauging, you're like, look, they're loud as hell, but price is not doing anything. They cancel out anything. All right, price is moving and they're paying attention and getting involved. Or price is going in the opposite direction and they're not making any noise. It all tells you something. Okay? And in all truthfulness, I don't know what the hell they're doing down at the pit. I just know how to play them. I just know when they make noise, I know how to fade them. When they gradually get louder and louder or quieter and quieter, I know what I'm doing.
So what are you doing now? You're still scalping. What are you doing?
I'm flat right now. I'm waiting for the next. All right. So here I'm looking. As soon as this equilibrium takes over and I'll have more buyers on this side and I'll get some guys that will start pecking away on this side and I'll get this thing to hook up, I'll go long again. But here's the thing. Look at this 1,000 tick reading. It actually went to plus 1,200 and then it pulled back down to about 600 and went up higher. So right now we're consolidating. I'm not doing anything until I see something in tape reading that gives me a clue that the sideways consolidation is over. Okay? As soon as I see that, I'd step in.
Some green print.
Yes, or, some movement. So like right now I see nothing. Right now I see nothing. Yeah, and the squeeze is saying get ready. A little bit quiet, kind of choppy here. Step aside. Okay? Just remember, you always like the people that bought this little move here. I don't know how smart that would have been, but I like selling my stuff to them on the way up when they did buy it. Most people that like buy breakouts or sell breakdowns, it's not really a good strategy. It's good in theory, it just don't work too hot in real life.
If you had to pick one tool, and you could only have one thing to trade on, would it be time sales?
For every trader or me?
For you.
It'd be tape reading.
Yeah, that's time sales.
Time and sales. Yeah, it'd be the skill of tape reading. I mean, which in and of itself, it's more than just time and sales. I mean, I would have to have time and sales, pit noise. Only one tool. Time and sales. Time and sales. All right. I'm flat. She said if I could only have one thing, what would it be? I would have to have the skill of tape reading, which is time and sales. I'll call you back. It'd be time and sales, pit noise, ticks.
No charge.
I don't have to have charts, no.
I mean charge.
You don't. You don't have to have the trade-off of.
When you say buying a breakout, selling a breakdown, something in theory, it's not really good. You're talking about short term, right? Because essentially the squeeze play is also a breakout, right?
Yeah, well, not if it's firing off at the highs. I mean, anything that fires off at the highs is not a real good theory in my book. I mean, the squeeze will actually, it'll go expansion in volatility followed by contraction.
Right.
And in and of itself, it'll pull back off the highs.
But when it's in the squeeze, when it fires,
Right.
that's signaling that it's going to break
That's
out of it.
That's a breakout of volatility, not a breakout of a new high or a new low.
Oh, okay.
Right. All right, so we've pulled back now. Are we trading sideways? Now, I have not even looked, but I know that because of pit noise. Because I know what the bid ask is right now, and I know Ben said it's choppy and sideways, and it looked a little toppy there earlier. Pulled back a little bit. Now, to gauge this, here's how I would gauge it. I would go draw my fib from here, from right here to here, and look for a 50% retracement. Now, I'll redo those things all day long. Like from this move to here, I'd go boom, boom, 50. And I won't even draw them. I'll eyeball it. I'll say, I would look to buy a pullback right in this area right here. Okay? And then I'll refine my entry based on time and sales. It may not get down there.
How long would you hold on to? I mean, you were talking 1 point there.
What do you mean?
Your entries at...
No, down here. Right here would be a 50% retracement right in here.
Below that bar.
Yeah. It'd be like 695 or something like that.
And you hold on to it
I just scalp it. I'd offer it out 3, 5, 8, or if I got lucky and it popped, I'd cut it off at 10. We're getting a little louder here. We're getting ready to go up. So did you hear when Ben was up here yesterday talking about the feel and the market direction and stuff? That's how I like to really, really trade. I will position trade and do the 50 ticks in the 5 minutes too and call them off in the room. But my style, in and of itself, I really like to scalp. But I mean, that's how I was trained to trade by the guy that taught me how to trade. I've just brought that over into the futures market. Okay? I'm looking to look at it. I would be a buyable area, but I would not enter unless time and sales said, okay, you should be all right.
Give me a couple of big green blocks.
Give me either guys starting to peck away, and it doesn't have to be green bars. It just has to be the selling has to stop there, and I have to see some interest at that point. Okay, and if I start seeing some interest, I may go with the guy. If I see a lot of interest and I missed it, I may have to wait. Okay, all right. The little guys can go first, or the big guys can go first. I don't care. Just one of you fools lead, I'll grab on your coattails real quick, and I'll throw it out to somebody else. All right. How late do I scout? I'm what I consider myself an ethical opportunist. If an opportunity arises, I'll take advantage of it. I try not to scalp. I don't like to scalp between 11:30 and 2, just because it's real choppy. And I kind of like to have a little bit of a life during the day. A guy named David in Lexington. He's still in the room. His call sign's Jack.
Oh, he's in the room?
Yeah.
Oh, great.
The guy can't read. He doesn't read charts. He trades off this and the bid ask.
Time and sale, or just go straight one side time and sale?
He uses the bid and ask and time and sales. He doesn't use charts.
Did he teach you how to break it up into the big ones and little ones?
Yeah. And then also like he'll ask me for chart advice. He'll be like, "Okay, what does the tea leaves say about this one?" I'm like, it looks okay. It's all right. So now we're making noise on the downside.
Yes.
What does that imply since prices are going down?
You're getting your retracement.
We're starting to get a little bit deeper of a retracement. Let's see where we're going to stop at, okay? So now, when the pit was making the most noise, did we get out close to the high of the day?
No.
A little bit lower?
Yeah, we went for the big red bar.
We did. We got out right here, right here. But did we get out on the high of that bar, close to it?
Yeah, well, in the middle of the second bar.
In the middle of the second bar. Okay. So good little move just with tape reading and pit. Is it confusing? Who's confused? It does take a lot of practice. It takes a lot of practice to do it. So now I'm gonna stand here and I'll just do it again. All right. So ticks are coming down here testing 0. The 50 tick squeeze is in a squeeze. We're at 107 even. We have little sellers at even. These guys sellers from 99 down to even. Let's see what we get here. Nothing, 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 nothing. A little lower, we've gone to 99, nothing. There's nothing going on. Pit's real quiet, there's nothing really going on. If I see something that catches my eye, but the bad thing about pitting timing sales and reading tape, you can't casually do it. Like when you do it, you got to focus. Because if you turn around, you're like, well, yeah, prices are at 99. They could have went down to 95, and now they're back at 99 again. Okay?
That's the good part of it, too.
Yeah. Because it takes forever for people to figure out how to do it. And most people aren't disciplined enough to learn how to do it. Like the guy that was trading up in the pit today. He wasn't paying attention to anybody. I mean, he had a cat on his left, a cat on his right, and I actually hit the window on accident, and he's just sitting there going, just trading away. And the other dude, he's playing Nintendo.
He was in a bubble.
Yeah. If we break 700 here, I would. If we broke 700 here, I'd probably go long. This is looking okay. This is getting ready. It's getting ready.
After the close?
Huh? Have we only got 10 minutes to go?
No, you have 3 minutes.
I wouldn't do anything. I wouldn't do anything.
Okay. And the squeeze didn't trigger.
So that's how you read tape. What other questions do you have about tape reading? It's an acquired skill. If you really want to have a half a step or a full step or sometimes a step and a half in front of amateur traders, you got to learn how to do it. I mean, because everybody else chases. What you want to do is it gives you the advantage of getting in a half a step or a full step ahead of them. Then when they chase, you can be like, oh, here, and here.
Most of your scalps, are you looking for
Okay, yeah.
Are you looking for just 1 or 2 or 3 ticks? I mean,
That's
my biggest problem when I'm doing this.
What, 1 or 2?
Too much, and then I lose it.
On the profit on the down minis?
Yeah, well, I do ESs, but the thing is exactly what you do right here is what I try to do.
I'll scale out. Like if I'm scalping, I'll still scale out. As soon as I get a price improvement on the down minis of 3 to 5 or 8 points, I'm gone a half or 3/4. And I'm trying to see if it's going to go higher. Like on the last one we did there, we were out of some really quick, and then we held it until the pit just went nuts, and then we're like, oh, that's a nice profit here.
You hit your first scale out,
Yeah.
and you don't hit your other scale out. If it drops back below your first scale out, you hit flatten net?
Not below my first scale out. I will give it a little bit of room. Like maybe my entry. Like maybe my entry or a tick below my entry.
Oh, good. That's what I've been trying to do. That's my hardest part.
Yeah.
You're right.
The squeeze trigger.
Try to close up.
It's too late in the day now.
No, I know. I know it's late.
Yeah, it's too late, but the pit goes crazy at like 4.
Okay.
Sometimes the pit goes.
Yeah, they'll go nuts.
So you stay out for the last 15 minutes?
Yeah, usually yes. Usually I will, yeah. Wait a minute. Question?
Oh, thank you. Now we have to wait for the bar to see if it's red or green.
Well, you
The
can't.
market to open tomorrow.
No, she's talking about the squeeze. It's already fired off. But what?
Okay, so it would have been red
Yeah.
in this case.
Yeah, I just have it shrunken down so you can't see it.
Okay, so got it.
And if Goldman Sachs sold 1,500 or 15,000 contracts right now, it would affect tomorrow morning. So I don't care what that guy said.
15,000?
That's what he had. That was that question. And that's,
Oh, if he sold 15,000 big S&Ps, yes, it would have an effect.
That's what he
No, it
was.
said E-minis.
He was talking about E-minis.
Even at 15,000 E-minis, if you look at their things, that's like 20,000. Moves the hell out of those things.
So really, guys, practice it every day. Every day.